So this is a little bit of an urgent video we wanted to get out. We had an email come in to us with somebody saying they had $300,000 to invest, and one of their questions was, should they pay off their mortgage or should they buy real estate or buy investments and real estate and that kind of stuff? And we replied to them, but the email bounced back. So if you're watching and you're the person with $300,000 to invest, this message is for you, and hopefully everyone else listening can pick up a nugget or two from this as well. And here's what we wanted to get across. When you're looking to invest $300,000, it's tough for us to answer without knowing more about you. And I think, to be fair, anyone in our situation would take that stance. But when you're looking whether to invest in real estate or pay off your home, I think you should step back and take a look at the bigger picture. And there's basically 4 categories that you can put that money into, and here they are. The 4 categories are, I hope you can see my fancy dancy little drawing here. And the 4 categories are, the first category is businesses. So this is a little store, shopkeeper I drew in this little store, in a little bakery, the Acme Bakery here, and this guy's selling his goods. And then there's real estate over here. And then there's gold and silver and things like that. These little circles are gold coins and silver coins, okay? Use your imagination. And there's oil, so gold and silver and oil and platinum and all that kind of stuff. Basically commodities. And then over in the bottom right-hand corner over here, there's paper assets. So we're talking mutual funds, stocks, bonds, all that kind of thing. So those are the 4 categories. So if we had $300,000 to invest, the way I would look at these 4 categories and kind of decide. Now, most people will invest in paper assets like this. And the reason for that is they'll get advice from financial planners, which you mentioned in your email that you were getting advice from your financial planner or from a financial planner. And the reason that most people will go into paper assets like this is it's easy. And the people selling you the paper assets, it's easy for them to sell it to you because they don't ask you to go all into one stock. They'll talk to you about diversifying. Now, if you look at this little map here, if you diversify and buy a bunch of different stocks and mutual funds, you're not really diversifying, right? You're buying a bunch of this category of thing. You're not getting anything else in these other categories. So you're diversifying across this one category of asset class. And the other thing is, it's been my experience that people who are selling you this stuff will ask you to diversify because it's much easier to tell you to diversify. And then if something goes wrong, there's no one area that really went wrong, that hopefully one stock continued to do well and another one went bad, and that you can't really point the finger at anyone kind of blaming them on the investments, right? So it's an easy way to give advice by saying diversify. Someone who's telling you to invest in real estate, it's a very focused advice, right? If they're telling you a specific commercial building, a specific apartment building, a specific single family home, they're kind of putting their name on the line and saying, hey, this is a good investment and do this. So people buy this category of asset class because it's easy. The story of diversification sounds good, but it's the average type of investment, so you get the average type of result from it. Okay? The other types of investments are typically better investments. You'll find that people with a lot of wealth have a lot of money tied up in these types of investments because they have more control in those investments. But here's the thing about these investments, is these investments take years to master. You can't just throw all your money in gold or silver or oil or buy a business that you don't know much about or just start throwing it at real estate without knowing about these things. It literally takes years to master this stuff. So to pick up $300,000 and throw it at an apartment building or a commercial plaza or a business without having experience done it before, it is risky because you don't have the knowledge behind you. So the biggest advice that I would give if you're looking at these categories to invest in, and I really hope you can kind of see this little diagram here, is that you need to find a mentor. You need to find somebody who has invested in one of these categories before and done well at it, or someone who's invested in these categories with a professional that they trust and has a track record, and then go after that referral and that professional. To just dive in on these things on your own without using the advice of like a mentor or professional that has really come as a referral to you, in our opinion, a little bit risky. So there's no easy answer. Whether you should pay off your mortgage and buy or buy investment properties, or pay off your mortgage versus buying some oil or some paper assets or a business. You really need to think this through. But those are the 4 categories. Remember this category here is going to be the easiest. It's the average person's investment. It also gets very average or even below average returns in our opinion. These have much better upside for you, but you need to find somebody who knows what they're doing. Otherwise, the risk on these ones is going to be higher for you. So that's it. Hopefully that helped. Hopefully this got to you before you decided what to do with that $300,000. Until next time, your life, your terms.